Hello and welcome to the SAF Magazine podcast. I'm your host, Anna Simet. You are listening to episode 4 in our panel preview series for the upcoming North American SAF Conference and Expo being held in Tacoma, Washington, August 25th through 27th. So we are less than 2 weeks out. And my guest on this episode is Terry Baggett, and he's head of business development at Circularity Fuels. He will be presenting at the conference. Terry, hello, and welcome to the podcast.
Hi, Anna. Happy to be here.
We're so happy to have you and excited to chat today and that you're coming to the show. So let's just jump right into things. Terry, first tell us just a little bit about Circularity Fuels and then what it is that you guys do there.
Awesome. Yeah. So at Circularity Fuels, we call ourselves a novel reactor company. We've got 2 reactors that enable us to turn waste gases into liquid fuels. And what we really focus on today is converting biogas into sustainable aviation fuel. And so, we're bringing our first project online in 2029 and working on bringing biogas to SAF as a traditional market vehicle for SAF. And then at Circularity Fuels myself, as you mentioned, I'm the head of business development and, really focused on all the aspects of project development from finding sites and feedstocks all the way through to engaging and signing offtake deals, whether it's with airlines, global fuel suppliers, commodities traders. So my kind of focus runs the gamut across all those things.
Okay, got it. Thanks for that nice introduction. Terry, what would you say is different about your approach to technology development, project development, feedstocks, and financing? I know kind of a loaded question.
It is indeed, but I think it really comes down to 3 distinct points, and the first 2 may be related. So the first one is that we own enough of the value creation stack to credibly create efficient and affordable fuels. And really, because we own those 2 reactors that are core to the technology, that means we can integrate very early on, and we can rapidly cost down, where we're not really dependent or reliant on third-party licensors or traditional oil and gas unit operations pricing. And that's key to being able to build cheaper plants in general. Second, and it's related to that, we take the project development lens. And because we are, as I mentioned, going from site and feedstock all the way through to offtake, and we're thinking about those things, that means we can optimize that whole system for the lowest cost path to fuel delivery. We can do things like change the properties of the fuel to work with standardized logistics because we own that stack. There's a world in which we'd license that technology to other people, but today, we can remain focused on really optimizing that as our own project developer. And then lastly, because we're starting with biogas, we're replicating a model that has been successful at least 3 different times in the US when you think about biofuels industry scaling. And so ethanol, renewable diesel and biodiesel, and renewable natural gas have all started from this same point where there was a initial higher capex, model that through close coordination with government agencies like the USDA, they scaled them up and created, very capital efficient models for making highly valuable fuels.
Well explained. Okay. So Circularity Fuels is building a modular Fischer-Tropsch plant that turns dairy biogas into SAF in West Texas, and we have been following you guys at SAF Magazine. For people who have not yet come across you, what does the project look like on the ground, and then what made you go after first of a kind at commercial scale?
Yeah, I'll start with the scale question first. Scale is always a question driven by optimal versus suboptimal peaks and valleys when you're talking about novel chemical processes. So in the beginning, we really focused on creating a scale big enough just to prove commercial viability. So, whether that means like over the last 6 months and last year, we've been doing less than a liter per day. And the next year, we'll have a system that's doing 10 gallons per day. And then on our commercial plant, we'll be at 75 barrels per day. Those were all decisions based on what was optimal at the time. So At the smaller sizes, the liters and gallons per day, it is simply about proving commercial viability. While at our first site in the 75 barrel per day range, that's really been focused on our viewpoint that it is the lowest or the smallest size to be economically efficient, meaning that we'll be able to drive a profit even from a plant at that size. And so that's kind of been the scale pathway we've taken. And then in terms of the project site and what it looks like on the ground, because we're a modular reactor company, right? Essentially, it looks like a traditional dairy farm with a digester on its site, so like a large tarped area, and then our two modular skids next to it, and that's core to what makes us different because we can put both of our reactors on the side of a dairy without meaningfully disrupting dairy operations and make fuel. Right, and so that's a key aspect of what we are bringing to the industry. And then when we think about the project site itself, that goes back to our assessment of what it means to do site selection and be a project developer. Because the feedstock, exists all over the U.S., but in the specific site, a lot of the focus was around, do we have great partners at all levels, right? So not just our dairy farm partner, but logistics partners who are already making or will be making power in the area, final fuel finishing partners that may exist, whether they're directly in West Texas or a very easy train right away in Houston for the fuel. So all those things really drove us to select a site in West Texas.
Okay, got it. Let's talk a little about your loan guarantee, Terry. So you guys pursued a $50 million USDA loan guarantee with an 80% federal guarantee. What does that guarantee actually unlock for a project with no operating history? And then what surprised you most about building the application and the feasibility study?
Yeah, this is something our CEO, Stephen Beaton, really feels the most. What it really unlocked was early stage investors. For good reason, early stage investors have been in recent history hesitant on investing in novel clean fuels technologies. One of the reasons is because, in typical pathways, you would need equity financing for the first of a kind plant. And what that does to an investor is it dilutes their return. What the USDA loan guarantee enables us to show and prove is that, we've got this stamp by the USDA that they're both interested and willing to invest, government-backed funds in our project through debt. And so that really de-risks the project from an early stage investor point of view and has made those conversations a lot better and a lot more fruitful. Now, what has surprised us in that regard is that same USDA guarantee has de-risked many of our partnerships, offtake conversations, commercial conversations in general, because much like an early stage investor who, when they see that the USDA will guarantee a loan and that a commercial bank will then provide that loan, when you're talking to an airline, a commodities trader, a fuel supplier, a feedstock provider, a logistics partner, they can take that same stamp and bring the conversation, contracts, negotiations up to board and decision level because there is this same confidence that with the USDA backing, the project can exist because it does have access to financing, which, as you all know, has been one of the biggest areas of concern for SAF plants in general. How do you get financing? And so that's been the surprising, aspect of the USDA loan guarantee.
Well, that's a good segue to my next question. You've said that choosing the right lender mattered as much as structuring the deal. Why choose a mid-sized bank with a dedicated USDA lending term over, say, a larger institution? And then how did that change your structure, timeline, and terms?
Yeah, no, this is a great question, and it goes back to many of the points we've stated. When I think about the mid-sized bank with a USDA focused arm, the key thing that we gained is an entity that understood how to underwrite our project. And when you think about renewable natural gas, which has scaled meaningfully over the last 20 years, well, this is a bank that's been underwriting many of those projects with the USDA-backed, guaranteed, or assisted financing. So they both understand the USDA aspect very well, and they understand how to underwrite a biogas deal. And when you look at a model of biogas to renewable natural gas and biogas to sustainable aviation fuel or liquid fuels in general, the models don't differ that much. There's a series of programs and incentives that exist for renewable natural gas. Those same programs exist for liquid fuels coming from biogas. There's a series of things that need to exist in a feedstock agreement at the dairy farm level, regardless of whether you're making renewable natural gas or making liquid fuels. And so that really gave us a partner who understood the basics and is not treating the model as first of a kind all the way through. While the reactor technology is different, the fuel valorization aspect is very similar to what they've been doing in the traditional gas realm. And so that really unlocked much better terms, a much better synergistic partner. As you can imagine, we're very tied in with many of the biogas digester developer, dairy farm developer teams in the space. And our bank is also partners with many of those institutions and entities. And so that just creates a lot of synergies. We work with similar people. They have a history with those people. And so it really just made a lot of those things simpler. And because they've seen projects through, the main thing they've been able to give us is just insight on how to execute on getting the loan guarantee and on the loan properly, seeing around all the corners, helping us avoid mistakes that they see other people make. And so that's really the key unlock in finding a mid-sized bank in the agricultural space.
Great answer. That all makes sense. So last question, don't want to give away too much before the conference. Feedstock choice usually gets framed as a carbon intensity question. You argue it's a bankability question. So how did picking dairy biogas and co-locating at the source change what lenders were willing to underwrite compared to, say, landfill gas or wastewater biogas?
Yeah, this is another core aspect. And, we would actually say it kind of extends outside of the gases in general. When you think about I call it the three major SAF feedstocks and biogas, right? As the fourth, but maybe not a major, is, you got used cooking oil, ethanol, alcoholic jet, and then really carbon for the ESAF players, and then biogas. The great thing about biogas, and specifically dairy mineral biogas, is there is a multifaceted revenue stream that already exists because of renewable natural gas. And this is where going back to a bank that can underwrite it is key. For dairy mineral biogas in the US, we have the ability to monetize a series of things. So first, we could sell the fuel. For us, that would be the liquid fuels of jet fuel, diesel, and renewable naphtha gasoline at fossil prices, which is what they do with renewable natural gas. Right. Then we could sell or monetize the EPA RINs. And for dairy mineral biogas, there's a precedent of being able to generate D3 RINs, which are some of the most valuable. On top of that, we have access to the low carbon fuel standard across now multiple states, and with the longest, most robust history being in California. And dairy mineral biogas gives you the ability to attain a negative CI score, which gives you, the ability to generate even more revenue on the same gallon of fuel, and that's due to the methane avoidance credit for the facility. And in addition to LCFS, for SAF specifically, there are the states that may have the SAF tax credits, and so with SAF, you actually get an additional pool. On the tax credit side, we have access to 45V and 45Z to monetize. And then with respect to SAF and diesel specifically, and diesel being more nascent, there's the scope 1 and the scope 3 market, from which you can also monetize the carbon attributes of the fuel. And so when you start to look at the model, we'll make 3 fuels. And, for all 3 of those fuels, there's at least 4 different markets to monetize. And then for SAF specifically, and then maybe a few additives for diesel, there's another 2 to 3 where you can monetize. And so you get this like I said, multimodal revenue model where each of those is maybe correlated, but not interdependent. And so if LCFS went away in one state, there are other states where it exists, but it also doesn't mean that 45Z or 45V or RINs or scope 1 and scope 3 or the inherent value of the base fuel go away or change, right? And that is where we see a huge de-risking, as opposed to, we think the UK and EU markets are of interest and very valuable as well. But when you think about the EU specifically, there's a lot of risk around whether or not the mandate will exist and in what form and in what timeline. And the great thing about picking dairy mineral biogas and what makes it bankable today is all the incentive programs I mentioned already exist today and are being used today by renewable natural gas, by ethanol, by renewable diesel. And so they all have precedents that exist, and we're just using those things that already exist to build this nascent first of a kind facility.
Really well explained, Terry. We're so proud to have you presenting at the show. Before we wrap things up, is there anything else you want to add?
No, nothing else from our side. It's always a pleasure to talk with the team, and we're always excited to hit the North American SAF Expo. It's one of our favorite conferences, and there's always great speakers, and we're just glad to be a part of it.
We're so glad to have you there, Terry. So I just want to thank you so much for chatting with me today. It's been a really great discussion, and I sure look forward to seeing you in Tacoma.
Sounds great. Thanks, Anna, and same here.
And to our listeners, check out the agenda and register at SAFconference.com. Hope to see you there. Thanks for tuning in.